CVS Health, it's been plummeting all the way to the ground. Can this company be saved? Is this a stock that you can see flying back to Mars as we continue on our way towards better health? Yes, CVS is the stock for you on Barry Charles, as we're going to do a full stock analysis. We are going to look at every single metric there is. Not quite, but we're going to look at a lot of the key metrics to give you a chance to look at a possible intrinsic value for CVS Health, and if it's worth a buy. With all the recession worries around, this is the stock for you going into 2024. Let's get to it right here, right now at Barry Charles. Welcome back, guys and girls, to the channel. We are going to talk about CVS. Yes, CVS Health. How has this company been doing? It's been a train wreck over the last year, down over 30%. Will the trend continue, or will they start to become more profitable? Well, if we look at the revenue for 2022 was $321 billion, up from the $70 billion on 2020. So absolutely flying up, about a 4x right there. But in 2023, it's not looking so good, with the expected big drop on that revenue. So that's not good for CVS. Well, in terms of the bottom line anyway, it's absolutely... the net profit of $4 billion in 2022. It's expected to be half of that in 2023. It's not good, looking good if you're a shareholder at the moment in CVS. But their net profit has been like this all over time, up and down like a yo-yo. So no surprises there if you are a CVS shareholder. The earnings per share of 8.6 is very good for this type of company. Very good. But my biggest concern here, 320, this is just 2022 numbers, 321 billion in revenue, and you can only make 4 billion out of it. That is pathetic. It really is. It's absolutely. The company has so much overheads. Obviously, the leases on their buildings is a big key point to that, and it's absolutely hurting the business. Should they be owning these businesses? Is this what they should be doing looking forward, to try and buy these places out, not lease them, buy them so they own the asset, and up we go? Is that what they need to do? It's a possibility. That's just something CVS could look at maybe going into the future. The PE ratio of 7.6 is absolutely ridiculous. Absolutely ridiculous. If you're looking at that alone, you probably say it's a steal deal when we get to intrinsic value. At the end of this video, so stay around for that. You'll find out what the intrinsic value is right now. Is it worth a buy, or if it's worth or not? You have to stay around to find out. Dividend yield. Yes, dividend yield of 3.68% thanks to the stock price dropping. I'd rather it come down a bit more and get to that 4%. Then that 4% is just that juicy on top. I think that's where any investor would like to get to, if it can get a bit lower. At $2.42 a year, not bad. Assets. Yes, the assets. Total assets of this company is 250 billion versus their total liabilities of 177 billion. So that's okay. It's not fantastic. It's not out of this world, but again, more assets than liabilities, so that is a positive. I looked at shares outstanding with CVS here. It's been an interesting one, but yeah, $128 billion. So that's a decline of 2.5%. So it's a positive. It's not super duper outstanding, but it's still a decline. So you are getting more money for your buck here in CVS. Free cash flow is starting to go down. It's not good. Down to around 11 billion from 15 billion in 2020. So, and it's even going less than that, I believe, of late. So it's not a good sign when you start to lose that sort of thing, when you've got to pay out your dividends. Stock compensation is just a little bit of a question mark here on this free cash flow, because if we look at long-term debt, it's not looking good. It's $61 billion, an increase of 10 billion on last year. Very, very bad. Very, very, very bad long-term debt. That is not good, and that's why people are running from the hills from CVS stock. Does it mean that maybe it's a buy? Yeah, I'm not sure what can CVS do itself. What can this company do? Well, I said before that it can try and buy more assets. So yep, try and buy more of these leaseholds that they have on core real estate, and actually buy this out and get it into the depreciation mode. This is the stuff that they need to start doing, I think. Obviously, they've got to figure out a way to get more at the bottom line. Where's that cutting cost? So many things, but there's a lot of rules and regulations around health that doesn't help the cause for CVS. But they've got to find a way to get some profitability back into the stock to really make it grow and make the investors want to come back in. Because I think investors aren't seeing that at the moment, and there's big question marks over CVS. What do you think at home? Yes, leave something in the comments to let me know if there's something you think about CVS that I'm not hitting here. There may be a potential way to invest into the stock, where they can grow. Obviously, CVS Health travel in a lot of destinations in the US. There's the further growth internationally. Maybe there's somewhere where CVS maybe can start looking a bit more. If they want to grow even more around the world, is a possibility for them. But yes, to me, if I'm looking at CVS if you're looking at all these metrics, where does it look like for me? To me, it's very tough for me to even look at buying this business, in my opinion. Not financial advice. You can do your own research before you invest or not invest into any company. Do it at your own risk. But yes, let's get to the intrinsic value of CVS. What intrinsic value is there in this company? Is there, according to, this is just one way to calculate EPS. There's more to it than just this, but this is just to give you a little bit of a simplified intrinsic value. So yes, we're going to look at a stock price. We're just going to go rough estimate because the stock prices fluctuate a lot. But we'll just say CVS is at $65 right here, right now. The earnings per share is 8.6. We've got, we're going to look at a growth rate to start off with 5%, which gives you an intrinsic value right now, with everything included, $165. Now, wowza. But to me, with 165, you've got to take off a few things here. I think you've got to take out the dividend, take that into consideration. You've got the long-term debt, that situation. So if I'm looking at what my sort of intrinsic value would be on this company right now, I would say more at the $100 range would be about where I see it at. But if you're looking at the grams calculator here, intrinsic value is 255 if you take it up to 10% on current price and earnings per share. And with the expected growth of maybe only 2%, because they haven't been growing that well, 112, that's the intrinsic value. That's probably where I'd say is where the true intrinsic value is right now for CVS. So at 65, it looks like a steal deal. But you're probably going to have to wait a couple of years for that to... Yeah. But to me, I think there is better opportunities in the market in this company right here, right now. But CVS is definitely one of those. I don't like the long-term debt. That is big bad clue for it. Obviously, dividend is pretty good. But the net profit has been choppy. Yeah, so the revenue to net profit is a big issue for me, and that's why I'm not invested in this company currently. It doesn't mean you don't have to invest in this company. It's all up to you. To me, it's just a few too many red flags for me to load the boat. And there's probably a stock that I'm going to talk about on the channel later that I'm invested in, but I am very worried about it. That is NLY. I'm going to talk about that stock coming up in the next month. So get ready for that one, because this is the stock that I'm in, and I'm getting a little bit choppy, or whether I should say see you later, because this company hasn't been great. But anyway, this was the CVS Health. This is Barry Charles. Remember to like and subscribe to the channel and click the notification bell. Share this video all around the world, so finance is number one. And you're welcome to leave any comments. I always answer. Have a great day out there.